You should consult your own tax professional to discuss the strategies that may work best for you.
Good morning. This morning, we'd like to talk about tax advantage giving opportunities because it is year end. And we've asked our accountant, Stephen Radmill, to come in and chat with us a little bit about some of the tax benefits that you might be able to enjoy by making donations to Utah Public Lands Alliance for the year end. So, Stephen, welcome. You're here in St. George, I believe, correct?
Yes, that's correct. We have a small firm, Savage Espen and Radmall. I'm one of the principals, and I've been practicing as a CPA for 39 years.
Very good. And how long have you been doing taxes for Utah Public Lands?
I don't remember exactly, but I think it's been I think it's been pretty much since inception, which I believe is
Okay.
about 7 years, seven or
So
eight
yeah,
years.
so we were formed in 2014, so probably about 10 years. So let's get into this. We're going to talk about several different things that I've got questions about, and one of them is what does it mean when an organization is a 501c3? What is that?
Well, there are a lot of different tax-exempt organizations, but only certain tax-exempt organizations are designated as 501c3. And what that means for those organizations is that people who donate money to that organization can take a tax deduction on their tax returns for the donation.
And so basically any donation is deductible, but sometimes people can't take advantage of those deductions, correct?
That's correct, because the donations are deductible as an itemized deduction, but in order to claim itemized deductions, you have to have more than the standard deduction. And we're in an environment right now where standard deductions are very high, which means that charitable contributions don't always benefit you.
Yeah. So I think right now the standard deduction for a married couple is about 29,000. Is that about right?
Yeah, that's correct. It's 29,200 for 2024, and then it's indexed for inflation. So in 2025, it will be $30,000.
Okay. And then also there are some ways to be able to boost your deductions in a given year using something called donor advised funds. Is that correct?
That is correct. Yeah, there's basically two strategies that we use to help people take their charitable deductions, even in this era of high standard deductions. And one of those strategies is what we call bunching itemized deductions. And that's simply where if you have a certain level of itemized deductions, that's not enough to make it so that you can itemize in a particular year. If you take 2 years worth of deductions and pay them in the same year, you can itemize in 1 year, and then the next year you still enjoy the benefit of the standard deduction. And a donor advised fund is just a way of donating money to a fund that is actually classified as a deductible charity. And then at that fund, you then recommend to the fund what organizations you would like to have them send money to. And so most of the time, the donor advised fund will follow your wishes in terms of where you want to send money. And their criteria typically is as long as that organization is a qualified 501c3 charity, they will send the funds on. So the donor advised fund gives you an opportunity to fund a large amount of money in a particular year without having to designate the charity at the time that you donated. You can also bypass the donor advised fund. If you already know the charity that you're going to be donating to, you could go ahead and double up your donations to that particular charity without using a donor advised fund. But a donor advised fund is a good tool to help you kind of lump sum your charitable donations and then choose which charities get the money later.
Yeah, so if you had a planning strategy, say over 3 or 4 years, you could put money into the donor advised fund, take the tax deduction in the first year, and then divvy out the money to the charities you want to support over the next 4 or 5 years, correct?
That's correct. Yeah. Quite often we'll use donor advised funds in situations where there is a large income event in a particular year, such as a sale of property or a sale of a big block of stock, those kinds of things. And that way the people can get their charitable deduction in the same year that they have the high amount of income. and then move the money to the charities later in later years when they don't have maybe quite as high of an income.
Okay. So that sounds like that might be a good strategy for some people that are getting close to that magic standard deduction number. Um, so let's say that somebody decides that they are eligible to take advantage of donations, either through a donor advised fund or just direct donations. There's a couple other things that they could do. I know a lot of people have had significant gains as a result of the stock market gains for in 2024 and 2023 late. So they could roll those savings. Can you explain how they could take advantage of those gains without having to incur additional tax on those gains?
Yes, that's a great point, is that one of the best strategies you can use to make charitable donations is to donate appreciated stock to the charity. You do not want to donate stock that has a loss position, but if it has a gain position, it's a great way to get kind of a double benefit, because not only do you get a charitable contribution deduction for the full value of the stock that you're donating, but you also do not pay any taxes on the capital gain that is inherent in the stock already. So you save the taxes on the gain and you also get a charitable deduction. It's a double tax benefit.
Yeah. So let's say that, like, if somebody had an investment in NVIDIA, and let's say it was a large investment, let's say it was a $50,000 investment that they made last November, um, that stock has almost doubled in the year. So they would have a cost of, let's say, $50,000 when they made that investment, but it would mean that their actual contribution would be almost $100,000. Do I have that correct?
Yeah, that's a good way of saying it, is if they were to actually sell that stock and then make the charitable donation with the cash, they would have to pay taxes on the gain. And by just donating the stock direct, they avoid taxes on the gain and still get the full charitable deduction.
Okay. And UPLA is one of the organizations that we can accept direct stock transfers. So that's not a problem for Utah Public Lands Alliance. There's another thing that applies to people that are over the age of 70, called a QCD. Can you explain that a little bit?
QCD stands for Qualified Charitable Distribution, and it's only available to people who are age 70 and a half and older. But once you're age 70 and a half and older, and if you have an IRA account, you can have the IRA custodian transfer money directly to the charity, or you can have the IRS custodian make a check payable to the charity, and you can then deliver the check to the charity. And by doing that, you avoid income from the IRA withdrawal. And you can use that, for example, for your required minimum distribution. You can take it out without that required minimum distribution technique. But what that does is it gets money out of your IRA, and you don't pay taxes when you withdraw the money from the IRA. The downside to that is that you also cannot deduct that money going to the charity as an itemized deduction. But really, there's no scenario when it's any worse for you to do that. And in many cases, having the amount come right off the top of your income lowers your adjusted gross income. And that makes it so that, number one, you don't have to worry about whether you are taking standard deduction or not. It also reduces your income for things like whether or not your Social Security is taxable, or how much your Medicare premiums are, or whether you can claim a rental loss. There's a lot of things that are tied to adjusted gross income. And by doing that, taking it off of adjusted gross income rather than taking it as an itemized deduction, it's quite often much more beneficial for you.
Okay. All right. That kind of helps. So there are some definite advantages on tax savings that may be available to people. Anybody, if they have questions about Utah Public Lands and how to facilitate a transfer to us, they can contact me. But what should the person do as far as making sure that the strategy that they're picking is correct? Should they
They should
call
just
you, or
consult
should
with their
they
own
talk to
tax
their tax guy?
professional. Yeah, that's right. Just consult with their own tax professional, see what their situation is, see if it would be beneficial for them to do itemized deductions or qualified charitable distributions or donor advised funds or or donating appreciated securities, any of the things we've mentioned today.
Very good. So, what I'd really like to encourage people to do is to consider this as an option, especially if you think one of these strategies might apply to you. And I've heard that the IRS regulations are kind of complex, so it might be best not to try and figure it out on your own. But like Stephen said, get a hold of your tax guy and ask them what the best strategy might be for you. And Stephen, I appreciate your information today. I think this will be helpful for our donors. And thank you for doing a great job for UPLA over the past years. You've kept us on the straight and narrow, and we'll continue to do that. So thank you very much.
Well, great, Lauren. Thank you for having me.
All right. Have a great day.
You should consult your own tax professional to discuss the strategies that may work best for you before making any decisions about tax advantage giving. If you need information about transferring assets to Utah Public Lands Alliance, please send an email to president@utahpla.com with your contact information, and I will call you. Thanks for your support.